the major point is, of course, we look at what's happened the last 2 days. But before that, the main gist of this webinar is the trend systems. Particularly, most of them get frustrated with sideways motion. Now, in the case of trend system, it works well when the trend is either bullish without any consolidation or bearish without any up and down movement. So, one-way movement is generally welcomed by trend following traders, because you do whether 20, 50, 100, 200-day moving averages, or you do MACD or super trend. Any of the trend following indicators works very well when there is a one-sided movement. That is, either it should be only on the upside or downside. In one of this, all these things, all moving average systems, MACD, super trend, everything works well, right? But what happens is, sometimes you have a consolidating market. Now let's look at some examples. That probably it goes like this, it goes like this, it goes like this sometimes. So this is a very frustrating thing for a lot of traders, because the moving average could come here, it will be like this, so it will cut here, go up, cut here, like that. So those who are in the early stages of technical analysis trading probably can get whipsawed because of the sideways movement, and it will be frustrating. So whatever profits they make in a while upward or downward movement probably can be eroded very considerably when a sideways motion comes. So the time frames alone cannot avoid, because suppose if you go for 5 minutes, 15 minutes, 1 hour, daily or weekly, it can happen in any particular time frame. Some consolidation can happen. So a consolidation in one particular time frame doesn't mean a consolidation in another time frame. Probably when we're talking about, say, let us say this type of chart in a 15 minutes, okay, 15 minutes, probably in an hour's candle, maybe there won't be any sideways motion. So what happens in a particular time frame can still be a big trend as far as the hourly time frame is concerned. So we can look at two different time frames also to design which side the market still exists. For example, if you are already doing 15 minutes trading now, and probably you are getting a consolidation like this, and you are following some sort of a trend following mechanism in a 15 minutes, then probably you look at a higher time frame to see whether it is still in a bear phase or a bull phase, and then take a call. Now, for example, let us say you have a time frame, 1 hour time frame and 15 minutes time frame. Okay. Now, in 1 hour time frame, let us say the market is on the upward or downward, let us say downward trend. In the 15 minutes, suppose when you're doing this, it can be like this. Now, even in hourly chart, in the 15 minutes, it can be like this, right? It can be like this, and then it can fall. And then it can fall. So what happens is that you will be generating a buy signal here. You will be generating a buy signal somewhere here. But in hourly time frame, probably still there will be a downward time frame, downward trend. So what you can do is that if the lower time frame in which you are trading gives you a buy signal, but one time frame above that gives you still a strong sell signal if it is there, then in that case you better don't take the signal of a shorter time frame. Okay, you can use the shorter time frame maybe for trailing stop losses. Okay, but if you are going to take a long position, then in that case you should also look at one time frame higher than the time frame in which you propose to trade, and see only when both the time frames are in a buy mode, you take that buy. If both are in a sell mode, you take a sell mode. Now in this case, in hourly time frame, so let us say it is coming like this. In a 15 minutes, it is moving like this, right? Then after then when it cuts here, then in that case in the 15 minutes also it becomes a sell, and in hourly it is still a sell signal. So both the hour gives a sell, 15 minutes also gives a sell. Then you can go for a sell. Okay, so just look at one time frame better than that, and then you can look towards going short or long depending on that particular time frame, on a combination of these two time frames. So we will discuss this through illustration itself. And then also you got so many systems which can probably or easy understanding, which can help you to decipher from the noise. Now, for example, if you're using a moving average, MACD or trend, super trend, and if it shows some sort of an choppiness in the market, then in that case you can also, along with that, you can use probably another system which is not prone to a trend following. For example, you can use a Fibonacci. Fibonacci levels. Okay, again, then even simple bar charts, high low, pivot high low, pivot high low, pivot high low, which could be the standard formula based pivot high low or the normal pivot high low which we get in charts. So you can use a Fibonacci, you can use a bar chart high low, pivot high low, along with the moving average in order to understand the buy signal which is generated by the moving average or MACD signal. So we will see that illustration. So just use one system along with the trend following system, which are the conventional systems, so that you will get a better understanding of whether that buy signal you should hold. So there are two methods. One is look at two time frames, one time frame in which you probably you want to trade, and one higher time frame. Only if both are in sync, then in that case you would take the trade. Okay, one. Second thing is that you also look at the Fibonacci or the bar charts high low pivot along with the what you're doing, okay, along with the moving average or MACD or something like that, and then use a combination of these two tools in order to avoid a sideways motion. Okay, so now we will look at the chart in some of the asset classes, particularly in the case of Nifty, Bank Nifty, some stocks, gold, and other commodities as well. Now you can see in a daily, this is a daily chart. Okay, even in daily chart, of course, the overall trend is no. You can just say the overall trend is down. Very clearly, the overall trend is down. Now let's look at the weekly, let's look at the monthly. Now let's say you're trading on a daily time frame. Let's look at the weekly chart. So weekly chart is down, right? So because one high, low, then high, low, so lower rise, lower drops, and it's very clear indication that it's a short position. So on a weekly chart, probably we can have some rally not exceeding this low, that is 16,000. This low is this 16,836. Now market is 16,345. So we could probably see a little more rally in the market, probably even heading towards 16,780 to 16,800, approximately to that particular level, before it starts to again fall. Because right now we have a weekly chart which is still bearish, So we need a definite close which is above this particular point, which is 17,100 in the case of a close, and at least 16,835 on a low perspective. So till the time any rally in a weekly chart is still a bearish sign. Now what happens in a daily chart? See, daily chart also is still bearish because if you look at it, the MACD is still below the trigger line, very clear. And here we have still a lower top, lower bottom formation only, except for the last 2 days there has been some sharp rally. But still the daily chart is also still bearish. It's still bearish. Of course, the monthly chart is also bearish now. So monthly chart is also bearish. So let's look at the overall picture right now. So overall, we have monthly which is bearish, we have a weekly which is bearish, we have a daily which is bearish. Okay. Now in the last 2 days there has been a good rally. From yesterday there was a rally. So from 15,700, 16,350 has come. Now 650 points of rally has taken place. Now we should note that I've already highlighted to you there's one important trend factor which is around 5.5% to 6% minimum rally has to take place from a bottom, which means around 1,000 points, so which is around 16,700, 800, and that is where we are seeing some sort of a weekly resistance also. So the overall trend is still bearish. So then how do we trade this market? Then where do we enter a new sell signal side? Now let's look at the sell side. Now let's go for the daily chart. Now right now it has to break below today's low, which is 15,990. So only when it breaks below 15,990 we can presume that probably the uptrend which is happening the last 2 days, okay, the corrective uptrend which we call right now, will be over. Okay, so we need to wait for a break now. As on today 15,000, tomorrow we may have some higher level. So that particular higher, suppose if we get a higher low above 15,990, so that low has to be again broken before we can go for a short. So market is still in a definitely in a short mode only. only thing is for the last 1-2 days it has become quite bullish. So now let's wait. The one is this way of analyzing. Then second thing, of course, is a trend line. So this line, okay, ever since this top was made, it's 18,350. This line is not broken yet from the January peak. So we may have some sort of a move which can take place. Probably going to here also it's coming close. So approximately the 16,700 800 levels looks to be a very important point, very important point. And let's look at the Fibonacci also. So Fibonacci 38.2% comes closer to 16,700 levels. So that's what we are speaking now, 16,700 800 levels. So 16,700 to 800 levels is the first area, which is a 38.2% retracement from the top to bottom. And so if this trend has to if this trend has to hold, if that is the bearish trend from this place has to hold, normally the 16,700 or approximately around that place will not be crossed, because normally in Fibonacci, if you are looking for one particular trend, now in Fibonacci, if this is a trend you are saying, okay, you are following this particular trend, then in that case, this should, the first area should stop as 38.2% of this entire move. If it starts falling below that, then probably we'll have a much bigger fall. So which trend you are following is very important. Okay, that will decide. Now, if you're following from this trend to this trend, we need a break which is approximately about 16,700 for us to go on the for us to abort our opinion about this bearish trend. Okay, so 16,700 750 has to happen, and that's now we are getting it more from the trend line factor and so many other aspects which are giving some indication that 16,700 rally can take place. Okay, but we do not know whether it will take place up to that level. Sometimes it can fall short. So then in that case, what we should do is, while keeping this particular estimate in mind, any rally right now which takes place, if it starts cutting below a particular daily bar, if it starts cutting below a daily bar low, then in that case probably we can presume that this corrective trend is over. And that is what has happened. If you see here all, see this fall went up, this cut out here, here, here. So very clear that we should wait for some sort of a corrective move to happen before we go for the shorter side of, for the market. So to establish that the uptrend, corrective uptrend is over, just wait for one pivot, 1 day's low to be cut in the present system. So that's how you can avoid a sideways motion, right? Because now if you look at it from the MACD side also, one of the trend following system, now it is still on the downside. So we cannot go long. So how do we use this MACD along with the bar chart in order to avoid the sideways motion? First of all, we should wait for the MACD to fall below trigger line. See, here it has happened. In this case, now just see, in this case it has happened on a daily chart. First of all, we have got one approximately this particular level is where probably we are getting a cut which is either close or this one where it is falling below the trigger line. So that means when this happens, then whatever if there is a fall which continues to take place above this, then in that case we know that this has become a top. This has become a top. 18,321 has become a top when this low is cut, which is 17,648 is cut. Now after that we have, so what we should do is either we can go short, wait for one pivot formation and then go for a short. That is the best thing. But nowadays, after the MACD is cut, it takes a long time. There's no pivot formation, and then there's a that fall is taking place. So if we have to take some sort of a call, what we have to do is establish the fact that since it has now come below the trigger line, you can go for a short, keeping that particular thing as a stop loss. So just at least wait for that particular day's low to be broken before you can go for a short. Now we can see here also in many cases, see for example in all these places there was a corrective up move. So from here it went up, but the MACD never crossed the trigger line. MACD never crossed the trigger line. Only here, let us say, now this particular place is just crossing the trigger line. Okay, so this particular place, there is no close above that. So I think this particular place is holding, and then after that it came down, and if you see, this particular place again. So some sort of an indication that probably this is a top. Some sort of an indication this is the top. So once this top is made, then probably you can look for going for short, probably keeping this I itself as a stop loss. So this is a general indication. I'm not saying this is the way to use. I'm just saying that how to identify some important tops and bottoms. So right now we have at some important bottom here, then important bottom here. So this bottom is 16,410. So 16,410 and it closes 16,625 a low. So that's a very important close that we should keep in mind. And then after that, this particular cut. So here this low is 17,050 or so is this particular close. So we have a 16,650 or 16,700, 750 levels is going to be a very important testing level as far as Nifty is concerned when it moves on the upside. So now I told you that this is the trend. Suppose if you're following this particular trend, then 38.2% Fibonacci, we should be in a position to guard. So what if we follow a trend from this particular place to this particular place? So let's look at it that way. Now in that case, we'll just go for a hourly chart to see which is the important high. So this is the important high, okay, which is the 16,815. So from 16,815, if you are following fall from this particular place, then in that case we put a 38.2% retracement for that from that level, let's say. So 16,105. So the first thing is the 23.5% retracement, which is the 15,940. So 15,940, once it started to cut, then we needed to wait at least till 16,105. So 16,105 is is where probably if you are following a trend system from 16,800 to this particular level, then we become a bullish once it started to cross 16,105. Now if you see after that, you can see many amount of this hourly chart, you can see supports coming here once it started to cross this particular line, okay. So this is a support, right? So you can see hourly support coming here, you can see a hourly support coming here, you can see an hourly support. There is some resistance here. Probably when it moves tomorrow to slightly higher level, the chance that it can go up to 16,562. Okay, this is a 78.6% retracement. So now it is held on to the 16,372 or slightly higher. Now it went up to 16,418. So it has gone above this. So that means once it started to go above this particular low, which is 16,240. So those who are trading on an intraday basis, at least should know the 16,240, because that was the last important point that was cut in the Fibonacci. Once that point has been cut and has moved to 16,372, now 16,240 becomes the important Fibonacci support, and a cut below that probably could change this uptrend move. Now if you are following again, as I told you, if you are following now from this particular level to this level, so we will now look at the so now the 23.5% comes at 16,240. So that's a very important, I told you, and that is now the stop loss, a very tight stop loss, okay. And though you may say 16,418 and 16,240, such is the volatility right now that it is becoming a problem. So here the trend will get aborted once the 38.2% retracement is cut, which is 16,129. So whether we go for a 16,240 or 16,129 is a case where probably what we should do is below 16,240 becomes a trailing stop loss. Okay. So any long position if you have taken, 16,240 is a trailing stop loss, and probably the entire trend can get reversed once it starts going below 16,129 and 130 if you are following this particular because the 38.2% retracement would have been cut. So now I leave it to design about how to apply this particular this one. So once the 38.2% is cut, then normally we will have 16,240 itself will become a resistance zone. So whichever trend that you want to select. So this is one way where probably you can avoid your choppiness by following a trend following system, but you can use that along with that. Now for example, See today, yesterday, this is an hourly chart, right? So here, if you see the hourly chart, here even in hourly chart, pivot formation is not coming that easily. Pivot formation is not coming that easily. But let's say we'll remove this and see, this was the first move I told you, 15,940 levels. Okay, 930, 940, and you can see the MACD now turning in an hourly chart above the trigger line, and this is a 23.5% retracement coming 15,940 also from this level to this level. So what probably you can look at it is that since the MACD is also now above the trigger line, you can use this trend following system along with that particular Fibonacci ratio in order to get a conviction about this particular trade. Now this 23.5% comes to 15,940. That's what we saw. So any cut above 15,940 with the hourly MACD above the trigger line, it gives you an indication that probably we can go for a long position as far as this particular asset is concerned, that is Nifty. So we can just see this application in other this one also. So let's look at the bank Nifty. So this is Bank Nifty. So let's look at the overall situation of Bank Nifty. Let's look at the monthly first. Down, clear. Okay, because higher lows, higher bottoms, trend line broken. Sorry, lower tops, lower bottoms. The trend line is broken. Then weekly, yes, it's down, but chances of a pullback coming back up to this particular close, which is 34,845. Sorry, just 34,845, correct. So 34,845 close is possible for it to come back. Okay, so another 500, another 1,000 points of rally in Bank Nifty is possible. Now, since now you are following this particular trend, let us say you are following a trend from this place to this place, assuming you are following that particular trend in a weekly chart. So we should look towards a Fibonacci from this place to this place. The 38.2% comes at 34,812. See, this is the place. 34,812 is the place. So, if this is crossed, probably then a dip can be bought. A dip can be bought. Okay. So till that time, I think better to wait for a trade to be on the shorter side. Now, how do we do? Now we go the daily chart. So the daily chart, now we should wait for it to go up to 34,815, and then if it starts breaking below a particular day's low, then we should go for a short. Now for example, if you look at the previous this one, let's say from this place, see here, it went up to 38.2% retracement and then fell, right? So once it went up to 36,650 here, then you just wait either because you should get a confirmation, otherwise there's a chance that it can keep moving up. So what you should do is that you should wait for a fall below that particular day's low, okay, before you can go for a short, or wait for a fall below the 23.5% retracement of 36,009 again to go for a short. So this is the general way you can look towards trading here, and using Fibonacci as well as the MACD, because if you look at the MACD, it's still on the downside as far as the daily chart is concerned. So you cannot go for a long position. So similarly, MACD is quite deep and the trend is very intense, and so the change here is very difficult to say right now. So what is happening right now could be just a corrective action. Okay, it could be a corrective action. So now we will look at the same thing as far as the hourly chart is concerned. So I think the overall fall, I think from this particular place we may have to take 36,717. I think that is where the daily top was there. Yeah, 36,710 on 24th February. Okay. Okay, so this is the top. Okay, so we'll draw the Fibonacci from there. So now you see yesterday the first is at 23.5% retracement, it hesitated right now. See here 33,244, it hesitated that particular level, and today it went up to 38.2% retracement and hesitated. For example, it went up to this place, right, which is 33,960. See 33,910 approximately. 905 is the 38.2%. Went up to 33,969 and collapsed back to 33,813. So what we need is a close above clearly 33,910, and if there is a clear close above 33,910 in an hourly chart, probably it can carry itself to slightly higher levels, then we need to wait for a break below this. Right now what we have to do is, we have to, suppose if it doesn't go up, we need to wait for a break below this particular high, which is the 23.5% retracement. So we need to wait for a 33,244 to collapse. So right now you can look towards, if at all the market turns ugly, then you need to get in for a short below 33,244, keeping 33,905 as a stop loss right now. Okay, 33,905 as a stop loss. So this way you can slightly avoid the choppiness along with, because right now the MACD on the see here what happened is, now MACD has turned has crossed the trigger line. Once it has crossed the trigger line, we have a pivot formation also, and we have this 23.5% retracement also is cut. So once that happens, then once this is cut, then you go for a long position here also, because in hourly chart there is a turnaround of above the trigger line, and there is also a pivot cut, which is the pivot cut in the sense it is a high-low pivot cut, and so you have a high-low pivot cut, you have a MACD above the trigger line in hourly chart, and then you have at least a 23.5% retracement being cut from one important level to this. So probably you can look towards going on the upside. Okay, so right now Bank Nifty also is in a bear mode, both on all type of time frames. So we should wait for a particular, now except I'm not going for intraday hourly chart or something like that. I'm only looking at daily, weekly and monthly. All are bearish. So when it is bearish, we should always be looking towards where we should go short, where we should go short. So now tomorrow if we are looking for going short, I'm not saying immediately, but if there is going to be a fall which is more than below 33,245 or so, then immediately, then in that case it is going to be a bearish situation. Suppose if it's going to rally, then let us say we have a rally which can take place up to 34,970. Okay, 34,970. Now if this is going to rally up to 34,970, then probably you can wait for it to fall back below this low of 33,905 before you can go for a short position, because once it crosses the goes close up to 61.8%, then because 50% we are not taking it as that important, so 38.2% Fibonacci we are taking it as a very important. So once it starts to cut below this important level of 33,905 again, then in that case we should look towards going short. So that is how you can try to avoid your choppiness. So Bank Nifty right now, let us say in the bigger time frame, how does it look like? That is in a monthly time frame. The monthly time frame, we can draw from this or we can draw from this. So let's say we are drawing from this. So the 38.2 comes at 34,864, and right now it is just above the 23.6%, 30,820. So that 30,820 has been cut, right? So I think to that extent we are a little okay, and so the next resistance is going to come closer to 34,864. Because normally in the monthly chart it may not exceed the see, this is this month chart itself. So this is month chart, and no, this is the previous month chart. So probably we can see, suppose if this high of this month is taken off time being, then we can see some extension going back up to 50% or 61.8% retracement also. But this 38.2% retracement itself can probably hold it. So we are expecting 34,864 to be a very, very crucial area as far as Bank Nifty is concerned. Once it touches that, then look for some weakness, either a day pivot low being cut or some important Fibonacci level to be cut before you can go for a short. So you can avoid, so with that help, and also with the help of the MACD at that point of time. See right now you can look at the monthly MACD turning down, so which is not a good sign, and weekly MACD is already down, daily MACD is also down. So what all this conveys is that whatever that is happening right now is still going to be corrective. It's still going to be corrective. Okay, there are a lot of headwinds for a bull market even now because it is below all the major moving averages. Then pivot low, pivot high being this one gone. Then we have a trend line problem also. So it will too early time for us to look towards a bullish signal. But of course there will be strong corrective rally in case if there is a settlement in the war. Okay, if there is a settlement in the war, there can be the peaceful discussions can take place to a very flurry of activity where the market can burst itself on the higher side because of the short squeezes and other things. But after that we have to see whether it settles down or whether it carries, because there are many other headwinds. One is the interest rate hike, liquidity being sucked out of the market. So those things are also going to happen. Inflation will still be a problem. So how the market is going to work out around all these things, even if there is going to be a resolution to the war. So to what extent, probably for what time frame and to what extent the price action, the bearish situation will continue, has to be monitored, because market cannot be taken for granted. It can always surprise us by reversing also. So we have to be on guard for that. But we have to know that there are a lot of headwinds, and even till now, whatever rally that we see in the last 1-2 days has to be presumed to be a corrective one. So we will now look at some of the asset classes where we look at gold, international gold, and then we look at some stocks. So gold is pulling down back 1988, good sign for the overall market, because during turbulent times gold keeps moving up on the upside. But nevertheless, I think gold will have strong support, because what happens is that if you see the trend line formation, see this particular trend line, this is going to hold. So this is going to hold, right? And also even before that we can see now this itself can hold, because this was cut clearly, right? So I think probably we have this month low itself is a very important low. This month low, which is 1901. So we have a strong support in this month, which is around the 1900 levels, will be as important support for this particular month. But now let's look at the Fibonacci for this. Okay. Now the last important low in the monthly chart is this. So we will look out the 38.2 retracement from this level, first of all, from this particular low, from where the recent from the low it took off. So now if you look at the first, the 23.5%, 1994 has been cut. We are looking at 1948 as the next important support. So now it's going at 1988. So there could be a lot of stagnation coming closer to the 1910. And 1910-20 levels also is a very important support come resistance, because we have seen 1915, 1916. So 1910 will be a very important level. Only a cut below 1910 probably could mean that 1948 I'm saying. So 1910 is a 50% retracement. 1948 itself, if it is cut, then we can presume that a top has been made very clearly. Okay. So this is as far as the Fibonacci is concerned. But if you see on the monthly chart, the MACD is trying to turn on the upside. So that's a quite late one. So we look at the daily chart. In the daily chart, MACD is in a very big trending mode. So of course there has been some pullback today as far as the market is, as far as gold is concerned. So unless we get some sort of a MACD fall below the trigger line and the pivot formation to be made like this. So here it went down below the MACD, okay, and then there was a pivot formation. So we have to wait and see how it behaves, if the MACD, whether the MACD is going to cut below this particular low. So which normally happens when the weekly low is being cut, so which is slightly far off. So I think probably it's too early to think about this. So right now, we are looking at the chart from the basis of the overall chart looks to be a top being made from the candlestick point of view, if you look at it, because it's almost engulfing the previous day's formation as things stand right now. So there seems to be at least a corrective fall coming in gold. We do not know where it will stop and it will happen, but the first support from the monthly chart comes closer to 1948. So let's see how it behaves closer to 1948, and if from 1948 it looks like turning around by breaking a single day high, then in that case we can we need to go long again in gold. So this is gold one is concerned. So let's look at the crude oil. So we look at the WTI crude, oil futures. So not this, I think. So now we can see in a daily chart, some sort of a retracement coming. So today is the right. So it went up to 128, and now it's coming today is around 116. So there's a good amount of retracement that is coming as far as crude is concerned. So the volatility has been so much that probably we need to be very careful about the crude technicals is concerned, because it is now more moving with what's happening with the in the war situation. But now clearly it's in a big uptrend, no doubt about it. But for a day or so, because of the this formation which took place yesterday, the candlestick chart looks to be that probably we could see some sort of a deeper correction in coming there. So there's no point in putting a monthly chart and all here. But let's look at some sort of this one from this particular place where some correction happened. So this is some correction because 3-4 days of correction took place here. So we'll put this here. So WTI crude now may come to $113. So here it happened here. So $113 is where probably the first support can come. Then probably we could head towards 103, 104 levels. So there's a chance that hopefully that there could be a deeper pullback towards 103, 104 levels. But whether it will completely reverse below 103, 104 is to be seen. Whether it is going to reverse completely below 103, 104 is to be seen. And the first sign of a reversal will come if 112 to 113 level is broken. So we are still only $4-5 away from that, and these things are not very difficult to breach levels because of the volatility in crude is concerned. So at any time if 112, 113 is broken, markets will other markets will heave a big sigh of relief, and we could have some reasonable retracement coming to 103, 104 levels. Okay. So we can use like this this one and Fibonacci. So we will look at the probably some of the stocks. Look at TCS, Reliance, ICICI. So TCS very good rally from the 34 other levels. This is what we have been saying, that we need to be very careful about TCS, because TCS is now making because those who are going on the short side, you need to be careful. We already highlighted possibility of some of the IT companies doing well because of the rupee depreciation and all. And if you see this is from 33.90 it has rallied to 36.32. Probably it needs to cross this particular low, which is 36.92, before we can heave a sigh of relief. But let's look at the technicals Fibonacci point of view is concerned. So we can probably use this place from this eye. Let's see the first levels. See the 38.2% first offer a resistance. This is 35, 64, 65 levels, and from there it started to come down. Okay, so there was no close below above this 35, 65. Now it has crossed 35, 65 decisively. So it is now probably getting a little bit of resistance closer to 3670, 3675, and probably it may have some resistance closer to this place, 3670, 70 and 80 levels. And if this is going to be broken, then probably we could see a much more substantial rally coming. And see, another thing is MACD is now turned in the upside. So we can wait for some pivot formation. Let us say TCS goes a little bit higher and then falls, Then if it starts cutting this particular pivot high, then we can say that the trend is really going to take off very significantly. Now this is as far as the daily chart is concerned, and let's look at the weekly chart and monthly chart. So weekly, we are having a huge consolidation since November between the 4,000 and 3,400 levels. So we have seen huge amount of consolidation. So at some stage, either if it's going to break, then we could see 4,600 and all coming, because normally to the extent of breakout of this, then you get a rally which will take place. So right now, I think the 3,400 levels is a very, very strong support as far as TCS is concerned. So every time it has fallen around that particular level, it has taken support and it has started to go up. Now, another thing that is very important note is that last week is an inside bar formation in this one. A weekly chart is concerned. So a rally now that is taking place above this also is a good sign as far as TCS stock is concerned. So the results is also coming next one. Then we have a buyback also going on. So I think with all these things, TCS looks to be still a good bet out on dips. And if you look at the trend line, we have got a trend line now. Also probably it can go, and resistance may come closer to 3700. So once the 3700 is crossed, then we can see 4,000, 4,600 was going to come. And 3-4 is a very important support. So any dip can be bought as far as TCS is concerned. So a good stock for investment. Then we look at the Reliance. Reliance, so on a weekly basis, the trend is still down. Okay, so we may have to wait for some weekly clearance. But it's choppy in a weekly chart. That's what I'm trying to say. And if you look at it, this is exactly the point which we are trying to drive. Now, it just went up, then came down, went up, came down. So this is a place where there's a lot of consolidation taking place, which can create a very sideways motion, and probably will not help us to go long and make money, or now short and make money. Because if you see, once it crossed this particular pivot, okay, then it fell here, and then it just cut the stop loss also got triggered. Once this sell is taking place, it is also not sustaining. There is no clear bearish trend. It is trying to pull back. It is trying to pull itself up again and again. So a very difficult thing to do the trade based only on a trend following system. But if you look at the MACD chart on a weekly basis, it is definitely down, because this is a weekly. It is below the trigger line, and it is also below a pivot. Let's look at the daily chart from that page. So the daily chart also, it is below the trigger line, so it's not easy to go for a long at this point of time. And this place and this place, I think probably this is an important level, 2410. So at least it has to break 2410 levels, and also on this trend line, which is also coming closer to that place. So we need a close which is about 2440, 2450 levels to say that the bearish trend is over there. But before that, what we could have done is we could have used the 38.2 retracement from this level to this level to go for a long on a shorter time frame. Now let's say from this place. So once the 2270 is cut, once this 2270 is cut, which is the 38.2%. To some extent, we can say that the trend from this particular level to this particular level, probably at least any short position you should have put a trailing stop loss about 2270. And second thing is that you could have also gone long for a rally up to 2358. Now a 61.8% retracement has come, so it is hesitating closer to 2358. Now this has to fall below this particular level. This is the 38.2% retracement. This is 2297. It has to fall below 2297 for us to reverse and then exit any long position which you might have taken in this particular up move. Now let's look at the 38.2 retracement from this place to this place. So it's also coming at 22.94. That's what I told you. Now this is what we said, that this place has to clear off. So now for this particular move, we should see 22.94 being cut. As we saw how no, we could have gone long at some stage. Now we need a close which is below 22.94 for us to decide about to go for a short, keeping this particular high as a stop loss if it is to fall straight away from this. If there is a further rally, then we should probably, though, this will edge itself a little higher, and we may get something like a 23.21 itself as a 38.2% retracement. So that we have to see how it is going to work out. But for the time being, it looks as if the Reliance has to fall at least below 22.94, and since it is on still on a bearish situation or a sideways situation as far as the daily, weekly and monthly is concerned, we need to be careful about trading Reliance generally because of the overall structure of the Reliance graph is concerned. But if you are looking towards any short position, then at least it should break 22.94 before you can go for a short, and a pullback can happen towards 21.80, 21.90, which is the recent low. Now look at ICICI. Now ICICI, this is our hourly chart, so we look at the probably what we can do is that we can draw the Fibonacci from this level right now, because that is an important top for us concerned, because here, as I told you, the MACD move out about the trigger line here and then fell. So that means this has been identified as the important top, which is what we said on Monday. Okay, so let's look at this. So though the broad market and other stocks have risen about 38.2% retracement, including Reliance and all, if you see ICICI is still not trading much, even closer to that. So probably a 680 levels in ICICI needs to be watched. So only if it starts breaking 680, 681, then we may have a move which can take up to 705. So what you should do is that you should wait for a 681, 682 levels to be cut and put 665 as a stop loss for a move towards 705. So this way you can use your Fibonacci for very comfortable trading, and a combination of the, so now here they are the MACD also above the trigger line. So MACD above the trigger line and the 23.5% retracement being cut. So some traders may take even this particular place, because now the MACD here, a pivot point, and MACD being above the trigger line. So there is a chance that you can go for a long even above 669, 670, and probably you have a chance that it can go up to 705. So you can have a stop loss below this level and go long above 669 or 670 levels also, because the reason is that we have a MACD which is above the trigger line. So that is one positive. Then you have a 23.6% retracement from this level being cut. Third is that you have a pivot high low. So the combination of this shows that probably you can go long. But anyway, stop losses become very important in a situation like this. So generally speaking, this is still a corrective thing, because the ICICI also is in a bear grip only as far as the all the different time frames are concerned. So only for a very small profit you can go for a long position. Okay, and then probably we have to look towards again going short even a script like ICICI. In the when it gives a signal on the sell side, the signal will come with a break below a daily low. Okay, so this is what it is. So hopefully we've been able to convey the impression that you can avoid sideways motion by using a trend following indicator like MACD, looking at the Fibonacci and looking at some pivot high low. Okay, so if you practice this, it will sharpen your trading skill. Thank you very much. So you may ask your questions now. Thank you. So thanks for your participation. So hope to see you shortly back with some other important topic. Thank you very much. Good night. Stay safe.